so much for coming on Tech Renaissance. It's a pleasure having you. I've been following you for quite a few years now, and it's great to actually have you on the show and to exchange ideas. As I was speaking to you earlier, I mean, the whole idea of this theme here is that I believe there's a merger of we're in a monetary transition, and there's a merger of technology, and this is the disruption of the monetary system. And so it's the whole idea is to bring on people like yourselves, exchange ideas, and then put it out there for viewers so we can essentially share knowledge and thoughts and get feedback from others. So to start off with, if I could get your brief background, and then we'll talk a little bit more about what's going on in the world and where things are headed, and what have you been hearing from some of the guests that you've had, and then I'll share some of my thoughts, and we'll have a conversational back and forth.
Absolutely. Well, thanks for having me on. I started Crush the Street a number of years ago. It was in 2011, but I've always been interested in the economy and precious metals. And I think it really stems, I have to give credit to my mother on this. My mother's family, her grandparents moved to Argentina when she was young after World War II. And that's a time when Europe was completely ravished by World War II, of course. They were Italian, and there was a big migration over into Argentina. And so my mom, growing up, they owned a store. And the store, they went through multiple times of hyperinflation where they had to actually raise prices multiple times a day. She had checks that she would go take to the bank that would actually go worthless by the time she got handed the check, and then needing to go and cash them. And the banking system, having the government essentially do these bail-ins where they freeze your bank account and then devalue the currency and then release it to you much 50% of what it was worth when you originally had access to it. Right. So my grandfather used to bury money while he was alive under his mattress, so he never trusted the banks, and that got transferred over to me. And I grew up here in the US with a relative amount of stability. But, I heard these stories. I was very close to the spigot. And my mom taught me that, you really can't trust these governments. It's inherently flawed. And that's how I got into this. And I started to really dive into, people and the psychology of people and understanding, if you can understand that truly, you can understand how to make money because you understand trends. And that's what I got into. And I started Crush the Street to start helping people share the knowledge, share the ideas. And, and the rest is history.
Excellent. So, so it seems like, I mean, you're one of the reasons, I mean, you and I have a very similar thought process because I actually believe that all these structures, all these, everything is being turned into a very scientific approach. And the reality is ultimately the entire monetary system is really just confidence in people's psychology. And so the whole, my own understanding is that, it's what people perceive. And, the second 10% of the population wakes up, it's actually a compounding effect where, in essence, it's a very thin line at that point in terms of where confidence is headed. I don't think we're near that yet, but I think we're getting there very rapidly. Each year, the momentum is heading in that direction because people are actually feeling the effects of misgovernance, misappropriations, and essentially devaluation of their respective currencies. I think this is a global phenomena, in essence.
Yeah, Argentina has been on my mind because maybe you saw that news story a week ago where the interest rates hit 40%. Yes. And that country is just riddled with economic cancer, over the years. And it's going to be so difficult for them to get out of that perception of being just a horrible economy and for the government to ever be trusted that they had to raise interest rates so high to incentivize investors to even take a chance on the bonds. And that's what's so crazy about it. Now, the U.S. has benefited from being a monopoly, essentially. The U.S. dollar has been a monopoly around the world, and they've been able to act in ways that other countries couldn't because of their status around the world, the military, the presence, the economic might, and the perception of that. And I think that's what they're trying to maintain. They downplay gold, they downplay cryptocurrencies, while countries that are actually on the rise are purchasing precious metals. They're preparing for a shift from the US dollar dominance to something like gold or silver.
Mhm.
And that's what I see coming. And I'm agreeing with you on that. I don't see the US maintaining that purchasing power, maintaining that dominance, and ultimately maintaining that perception of such a strong environment. And once we start to lose that, that's a very, very difficult shift to turn around. And to be honest, they've done a really good job of maintaining that, especially with the stock market going up and hitting new highs. But even that's at a major risk. And if we start to see some major cracks in the stock market, that'll get people questioning the strength of the U.S. economy and, of course, the dollar. And if the Federal Reserve goes in and really injects everything with trillions of more dollars, which I ultimately believe they're going to do, to what extent are they going to go to? Are they going to have to raise interest rates to 40% like Argentina? I mean, I don't know if it's going to happen that quickly, but to incentivize people, because at this point things are held together to a certain degree. But at what point does things start to come unhinged? And I think we're slowly getting there.
Yeah, I mean, I agree with you entirely. I mean, it's if you look at the point where we've essentially been in near zero interest rates in the U.S. for almost a decade now. Most of Europe, we're sitting in negative interest rates, which I don't even understand mathematically what negative interest rates are in terms of why anybody would want to buy or put money into bonds that yield negative interest rates. But it seems like we're at that precipice in the globe where you see countries around the world de-dollarizing. And we've come to a point where essentially the two biggest creditors of the US, China and Russia, are the last ones standing, where basically either we go to world war, because all the associated geopolitics around the world, any country that could have been forced to move one way or the other has already been taken out, or forced into one currency or the other. And now you're seeing, especially if you look at Xi Jinping's plan in the 18th Congress in October of 2017, it seems like China is taking a greater role backed by Russia, where they want to take more of a regional role, and they see themselves as a leader of the globe in the next 50 years, which I'm not really sure if that's a good thing or a bad thing, because no empire, eventually all empires end up being the same. But I'm definitely in agreement with you that we're definitely at some precipice of some major events. In terms of the monetary transition. So, talking, on gold and silver, I mean, when we look at history, I mean, all empires that have lasted have, were essentially had a deflationary gold standard, where they were able to provide prosperity for their citizens or their affiliate economies, whether they were colonies or they were just territories. And then essentially, whenever they've gone off the gold standard, and we move into an inflationary monetary system, dominance seems to be really tough. I mean, if you look at the UK, United Kingdom, they went off the gold standard in 1939. That was the end of their deflationary monetary system. And they lasted for 5 years as the reserve currency of the world. In 1945, after Bretton Woods, we had the US dollar as a reserve currency. And we went back to the US dollar essentially because the US had all the gold after World War II, or a fair chunk of the gold. And we pegged $35 to an ounce of gold. And it seems like we stuck to that standard till 1971. And then since then, we've been back on an inflationary cycle, which I'm pretty amazed that we've actually pulled it off for so long. It's the resilience of the U.S. economy, or it's just that this is one of the greatest empires in the history of the world, so they were able to maintain control. What are your thoughts on the role gold and silver are going to play potentially in the future? Then from there, we can dive into actually how cryptocurrencies are capturing some of that sentiment that should have gone into gold and silver. And, and are gold and silver being manipulated through excessive shorts at the London LBMA? So I wanted to get your take on that.
Okay, so lots of stuff there. I'd like to comment on what we were saying before, and then I'll jump over to that. talking about China and their move. I mean, right now their economy is greater than the U.S. by purchasing power, and they're expected to surpass the U.S. by the mid-2020s or 2030. And it's interesting because the U.S. has spent trillions of dollars on wars around the earth, and all this unfunded liabilities, and just to sustain the military right now. We're spending trillions of dollars and going into massive amounts of debt, while China is also going into debt by the tune of trillions, but they built out infrastructure within their own economy. Our own economy right now, I mean, we have cities in the US right now bursting at the seams, but China has hundreds of ghost towns with the size of New York City that are ready to be populated. At some point, people are going to go, okay, this city is reaching capacity. We want to start more business. We can go into this city. And is it possible that we start seeing migration from Western nations or countries around the world that are bursting at the seams or riddled with economic problems, ultimately moving to China for economic prosperity? I don't know. That's something that is yet to be determined. Now, I think the one thing the U.S. could do, I'm not advocating for this, and I think it's possible, is that they go in and attempt to weaken another economy through war. Because at that point, that ultimately could stop and ravish an economy to the point where, it maintains that dominance. The U.S. maintains that dominance through, spiritedly striking through war. And I think that's unfortunately something that the U.S. might try to do. And we've seen that happen with the petrodollar and the efforts that the U.S. goes through to maintain the U.S. dollar, petrodollar hegemony. So going into precious metals, gold and silver are money. And it's interesting that we have these currencies that are backed by precious metals throughout history. But what does it tell you when at any point the government can say, okay, well, this relationship no longer exists? Like, that's a contract that is broken. So in reality, even though it was backed by gold, the fact that there's that counterparty risk that ultimately it could be broken really makes gold and silver physical the only thing that you can trust ultimately, and it's finite. And that's one of the reasons why I like cryptocurrencies, because there is no centralized control. I know we might get to that in a minute here, but I love those aspects of finite hard assets. And there is no guarantee when it comes to savings. That's another thing I was thinking about this other day. I wrote a little piece on it, and there's no guarantee when it comes to savings. And if you go back thousands of years, there was no concept of savings. There was just, maybe gathering some fruits and nuts and slaughtering some animals and having some food for the winter. But this concept of actually being able to store your wealth was something that was awarded to humanity through, the concept of, okay, purchasing something that can maintain its integrity throughout time, and it was a concept that eventually evolved. And I don't take it for granted just maintaining my purchasing power. We always try to grow our purchasing power, and that's a good thing that we do. But the fact that we can just maintain our purchasing power, the only thing that I am very confident in is something like gold and silver. I like certain parts of real estate, strategically located real estate. I believe that's finite, areas that have great weather, certain stocks that I don't believe are going to go away. And because nothing is guaranteed, you have no choice but to diversify.
Mm-hmm. Absolutely. Speaking of real estate, I mean, Western world real estate, I don't think this is a universal thing, but anywhere where there's excessive leverage. I'm a big real estate investor. I personally love real estate because it's a very stable asset, and it at least preserves somewhat of your purchasing power. But many times I've become, especially in leveraged economies, I've become very concerned with real estate, because when you have such low interest rates and essentially such low credit lending requirements, you're essentially you're creating a bubble in housing. And that's, since the last financial crisis, the three bubbles that we've created, which I'm worried are going to reset in the coming years, are the housing, the equities bubble, and the bond market bubble. So where would you invest? What type of real estate would you invest in? If
Yeah.
would it be
Well,
New York? Would it be London or agricultural land?
I'm more familiar with the U.S. and real estate here in the U.S. I've recently purchased an apartment complex in the Fort Myers area in Florida. I just believe that area is going to see an influx of people move into it. It's not apples to apples. It's not, a Ford Taurus in the U.S. is the same as a Ford Taurus in South America, is the same
Sure.
as a Ford Taurus in another country, right? Real estate is not apples to apples. You can buy a $200,000 property somewhere that is in good shape. You can buy a $200,000 property that's needs a lot of work, and you might get a bad tenant. So there's a lot of ups and downs and kind of things that can make your investment better or worse if you know the industry. But I believe that areas that are finite, that have good weather, that are seeing a flow of people move into them, have a better chance of at least maintaining their value. I'm not saying it's guaranteed, but that's just it. It's not always about perfectly timing an investment where it just immediately goes up. For me, it's just about balancing my portfolio and not losing money and trending higher over time. And if you can get a portfolio of real estate where you're getting 10% a year on your rents, I mean, slowly that'll go higher. I mean, rents is an inflation proof, an inflation protected thing, because if the dollar starts collapsing, your rents are going to go higher. Everything gets more expensive. So there is an aspect of real estate that is good. And again, it's not always about timing it perfectly, although it's best to do that. But there is no guarantee in investing. What's your other option? Buying the US dollar or holding the US dollar? That's a risky thing to do over the longer period of time. At least real estate gives you a dividend that pays you to wait if you rent it out. So I really like real estate for that. I don't believe in being 100% in precious metals, even though I like them a lot. I don't think you can go wrong in that. But keep in mind, gold and silver does not pay a dividend. And I'm sure you're aware, the stock market, if you've invested in the stock market over the last 100 years or so, 70% of the gains have been from dividends and not from capital gains. So I think it's important to have both the capital appreciation as well as an asset that pays you. I think that's very important.
No, cash flow is king. I was reading a report a couple of years ago that, and you're right, it's not symmetric. I mean, pockets within the U.S., there's certain markets, like especially your Class A markets like New York, San Francisco, L.A., they're in a bubble. But then there's areas, Fort Myers I didn't look at, but I looked at Jacksonville, Florida, San Bernardino, California, Denver, and the net job creations, the net migrations, the type of employment that was there, the house supply and demand was off. So definitely there's definitely amazing opportunities depending on the market within the U.S. that you look at.
Yeah.
That's great.
Well, you have an inevitable trend too, population growth. So you have a Newport Beach, for instance, one of the highest zip codes, highest costs for real estate per zip code in the world. You look at that and go, how is someone able to afford that? But it's not about the average person being able to afford that. It's the fact that it's Newport Beach and the population is growing and there's enough people that can afford that. And that's just the way it is. So, there's very limited quality places to invest your money in real estate. And if you do it blindly and just throw your money anywhere, you could be caught up with the implosion of higher interest rates, because eventually it's going to get too expensive And there's going to be an unraveling of this new normal in the US and, around the world. It's going
Right.
to affect
It's a
the
global
rest of,
phenomenon. Absolutely.
yeah, it's going to be, an implosion that really shakes the whole world. And you know what, I think it's best to be really well positioned. You need to look at your situation and say, can I afford to see this go against me to a certain degree?
Right.
Am I comfortable with my precious metals holdings? Am I comfortable with my stock position? If the stock market moves down 30%, am I okay with that, or should I just sell that? Because I think it's very possible that we see equities move down in a very large way going forward here. And, but maybe you're diversified enough to say, you know what, I'm okay with that. I'm okay with a big downward move like that.
Sure. Makes sense. Um, let's talk about cryptocurrencies. My own belief is, I mean, there's a technical element of looking at cryptocurrencies, understanding the exchange of value web, but it's almost more conceptual, as you mentioned, where decentralized currencies. When we look at cryptocurrencies, there's actually really only a handful of currencies, and then within currencies you've got deflationary currencies such as Bitcoin, Litecoin, and then you've got inflationary currencies such as Ripple, for example, right? So which is more of a settlements network, but still the element it plays is no different than what our current fiat currencies like. So where do you see cryptocurrencies fitting in? Is it really a replacement for the current monetary system as we move into a digital economy globally? One of the major effects in the part of the world I'm in Asia, there's about 5 billion people that are going to be coming online over the next 5 to 6 years, and so that's going to have an enormous effect in the overall digital economy globally. So where do you see cryptocurrencies? What role do you see them playing? Are they the future?
Yeah, I really see cryptocurrencies being power to the people. We've had a system over the last number of years where the control has really been centered in very few people, central banks and governments. And, you look at what the internet has done for people, with news, for instance. I mean, guys like us are talking to each other and sharing information freely. It's not just coming from one source now. And this is what cryptocurrency is doing for wealth and for money. And I think that's how things are going to progress forward and change the future. It's such a beautiful thing that Bitcoin was birthed, obviously, out of the 2008 financial crisis. The world was looking for something for purchasing power to enter another vehicle. And even with precious metals, we know that precious metals are largely manipulated. But cryptocurrency has now brought another competition, another angle of competition to these governments, which are getting more and more reckless. So I agree with a guy like Andy Hoffman, who thinks that Bitcoin and gold are the twin destroyers of the fiat currency system. And I think that's where things are going with this. I love Milton Friedman's 1999 little clip. He talks about the world needing another form of money, internet money, he calls it. He basically predicts what Bitcoin is today. And he talks about how it's so easy for government to tax something like real estate because it's physical. People can drive up to it. Authorities can drive up to it. You can't move it. But, in a world where things are so manipulated, take a country like Argentina, for instance, it's very easy to control the money that's in the banking system. It's easy to control the real estate there. But, if things got so bad, people can move their money into cryptocurrency, jump on an airplane, if they have the means to do this, and live somewhere else, transfer their wealth. And that's the ultimate opt-out of the system. It's the ability to opt out. At this point, we haven't had the ultimate need to opt out. A lot of us have, and have taken our money and done things with it to be able to opt out of the system. But the system largely works still. I'm here in New Orleans, and I can drive around. Things are fine. We all pay our taxes. Things are things are fine. But if things got to the point where it's Argentina status, we have an opportunity to opt out of the system. We
Yes.
move our money into cryptocurrency, jump on an airplane, and we're gone. Like that's the ultimate freedom right there.
I mean, especially in some of these, I think the U.S. Is a much more stable place where the trust deficit with the government is not as high for the general population. But especially in a lot of these emerging economies, especially where you have governments that are massively corrupt, they've misgoverned, basic necessities aren't there. And on top of that, when these governments get desperate, they introduce capital controls as well as travel controls. So I think you're 100% right. And that's why we've seen Bitcoin priced much higher in places like Zimbabwe and Venezuela at times when their governments basically failed the people. And I think at one point when it was priced at 10,000 in the U.S., there was almost a $3,000 to $4,000 premium in Zimbabwe because people were just getting their money out by pumping it in Bitcoin and trying to make an escape from their collapsing government. Which case the government was responsible for the collapse itself by just simply misgovernance.
Yeah, no, it's a really interesting thing for them. We worry about Bitcoin going from 9,500 back to 6,000, in terms of US dollars, but they're worried about, a 90% collapse in their currency, in their actual underlying currency. The trust in their tool for transacting within their country is gone. So the volatility that there is in Bitcoin, and more importantly, the freedom that there is in something like Bitcoin or Litecoin, is very appealing. And I think that's power to the people. It's competition. It keeps the central authorities in check. And that's the beautiful thing about, this decentralized atmosphere, the internet. People are not as easily controlled. You can get information on what's going on in other parts of the world and not just be manipulated to believe some propaganda that the government wants you to believe. You can actually go online and see what people are doing. It's hard to hate somebody around the world when you look at their Facebook page, see them, walking their dog and playing with their kids in the park, the way it would have been many, many years ago when we didn't have that connection to people around the world. So things are really changing, and I love what the decentralized atmosphere is bringing to the world today.
Absolutely. It's I want to pick your brains on what we've been on in this bear cycle in cryptos, which we ran up and had a phenomenal run in 2017, which I think towards the tail end we got into too much exuberance. But since then we've had a downward trend, I think for a little bit over about 5 months now. And it was somewhat odd that this was right after the futures markets came about in December. And since then, the behavioral pattern of Bitcoin, and we have to see how this plays out, seems to be behaving very differently than in the past. And I personally don't think they'll be able to manipulate this the way they, when I say they, it's the system, the way that gold and silver have been manipulated, because you do need at some point physical, not physical, but actually to purchase Bitcoin versus the paper version, paper trades. And, so it's a constant, it creates volatility, and they have to keep dumping in the market, then repurchasing them. So where do you see the market heading? I mean, do you think we'll get to some of those numbers where there's all sorts of predictions for the next 12 months where Bitcoin will hit 25,000, 40,000, 100,000? I think Tim Draper just came out with 2022 of 250,000. John McAfee, I think, is definitely going to have to eat his private parts in 2020, because I'm not sure if it's going to get to $1 million in 2020. So where do you see the market heading? And I also wanted to get your thoughts on Litecoin specifically, because that's another cryptocurrency. I think it's a silver to Bitcoin gold. Bitcoin's gold, and I think that at some point it's going to exhibit the same rise as silver. So where do you think the market is headed?
Yeah, well, I just to touch on gold and relate it to Bitcoin, gold has an $8 trillion market cap, but because I feel like there's a lot of upside that there is in gold, I believe there's going to be a big wealth transfer with all the debt that's in the world. I mean, there's predictions out there that gold will be $10,000, whatever 7x of where it is now, maybe higher. So that's a much larger market cap for gold than where it is now at 8 trillion.
Mhm.
Bitcoin is much lower than that. I think for Bitcoin to just get to $8 trillion, it needs to be over $400,000 a coin, like 450 or something like that. And there's a lot of pie in this space to, for this wealth transfer to take place. And I'm not saying it's going to go to 400,000 and even meet gold's market cap anytime soon, but anything in between would be, a big move higher for Bitcoin. I think that's very possible, especially as we have countries dive into it. You're going to have the investment community using Bitcoin as a non-correlated asset. That's going to be a very big deal. I'm talking to hedge funds who are going to use Bitcoin just to have something to diversify from stocks in, the same way they have gold. And as soon as Bitcoin starts to reflect some of this, I believe it's going to go into the $1 trillion market cap and beyond. And so I think the upside for Bitcoin is very, very big. And it's easier to see that now that we saw $20,000 Bitcoin, because, a few years ago, people were like, this is a speculative investment. It's monopoly money. But nobody was interested in $600 Bitcoin. But once it got to $6,000 Bitcoin, people were much more interested in that, even though arithmetically, it's much more beneficial to buy into $600 Bitcoin than it is to $6,000 Bitcoin. But $6,000 Bitcoin proved to the community that Bitcoin is a viable investment. That was when we saw the futures market implement and move forward.
Mhm.
And so because of that, because of success in Bitcoin, I think it's going to continue to move forward. I think momentum will breed momentum, and more people will understand and come around to it. Now, we did have that euphoric stage where it went crazy. I was getting texts left and right from people who would have never even considered buying a Bitcoin, buying a stock, never bought a stock in their life, and they're asking me about buying Bitcoin. But I think that there's a good washout took place, and we're starting to see it move higher again on fundamentals. And, we're going to see advancements take place in Bitcoin. I think right now only 4 to 7 transactions can take place every second. They're working on being able to do, 1 million transactions a second.
The lightning
Yeah.
network, once that comes
Yeah.
online.
So, I mean, if you consider the value add that's going to bring, I mean, that's really going to make Bitcoin to be able to buy a cup of coffee with. Everyone's talking about how they can't buy a cup of coffee with Bitcoin. Once you implement that, people will be able to buy a cup of coffee with Bitcoin. And how cool would that be to have the option to say, you know what, I don't trust my local currency, but hey, I really like that Bitcoin does not have any sort of real control on it. And, it's going to be very difficult for anyone else to duplicate what Bitcoin has done, right? It was the first mover, but at the same time, it's very special that there was no founder, and there's nobody to really pin this currency on, which I think benefits Bitcoin in a major way, which is, again, going to be very difficult for any other cryptocurrency to ever duplicate. So I'm very bullish on Bitcoin. I think, $10,000 Bitcoin, we'll be looking back going, hey, I wish I took advantage and bought more of it.
Absolutely. So just, I know a lot of people don't like numbers. Just where do you see Bitcoin? Do you agree with Tim Draper by 2022? You'll see $250,000 Bitcoin?
I think it's very possible. $250,000 Bitcoin by 2022, especially if we see some major moves into it. It's a complete guess, but that's about a $4 trillion market cap roughly. Mm-hmm. If 400,000,
I think roughly.
Yeah, I mean that's very reasonable if Bitcoin really really becomes an asset class, and I think it's happening. I said in 2011, Bitcoin was speculation, monopoly money. You know, into 2013, it got into the bubble phase. People forgot about it, you know, from 2014 to 2015. But into 2017 and 2018, Bitcoin is now an asset class.
Yes,
And,
I agree with you.
you know, and it's indelible. It's not going back.
But if you look at, I mean, a lot of comparisons were made when we entered this, which I believe to be a brief bear cycle and a healthy correction that we've had. Um, But if you look at the pure number of fiat gateways that exist today, we didn't have a Coinbase back in 2013. That was so, you know, readily, it was so easy to get into to actually buy Bitcoin. So those gateways exist. The custodian services that are going into place, I think that's really what's very important for your institutional investors to come in, because they essentially cannot invest unless there's third-party custodian services that can hold the actual coins for them. In digital wallets. So I think that, but as those start to roll out in May, June, July, I mean, again, that's speculation, but at some point they're going to be coming online within the next 30 to 90 days, I believe, based on what I'm reading. I think you're going to see a major spike because everyone's nervous as the 10-year US Treasury is, you know, just kind of pinged above 3%, and it made everybody nervous in the markets. They're saying the danger zone is between 3% and 3.25%. And I'm not sure if you looked at Tom Lee from Fundstrat. He was a former equities research head for JP Morgan. So they've actually done studies, and they've done research on multiple asset classes for the last 15, 20 years. The conclusion that they've come to is that Bitcoin actually is an uncorrelated correlated asset. And if 1 to 2% of a portfolio is simply moved into cryptocurrencies and Bitcoin, it actually stabilizes the rest of the portfolio, which is what, you know, essentially Gunlock and Ray Dalio have been doing with GLD and SLV in terms of trying to stabilize their portfolios as risk as we moved into 2017 and 18, where they've gradually raised you know, those stakes from 1% to 2% onwards. So I'm very bullish because I believe that as these institutional investors come in and family offices come in, you're going to see them move trillions of dollars just to correlate, you know, just to get into this uncorrelated asset class. And while I love gold and silver, and I think it is the ultimate form of money, and I do have positions in gold and silver, but I don't believe that, you know, the price, you know, the $10,000 gold price, which I think that's where the price should have been. What Bitcoin is capturing is the sentiment that should have gone into gold and silver, because it'll eventually lead to world war if we have gold that high, because one nation is going to be out and the other nation is hedging or multiple other nations are hedging with gold. So that's actually made me even more bullish on Bitcoin and things like it, particularly deflationary currencies. The reason why you bring up Litecoin, and I wanted to pick your thoughts on Litecoin, is because, you know, again, it was the first fork off of Bitcoin. I think after Bitcoin, 2011 was the fork for Litecoin. Charlie Lee, while he was a central pivotal figure, he sold a lot of his Litecoin essentially for the reason that, you know, you're highlighting that Bitcoin is autonomous. Meaning it's a protocol without a central individual influencer behind it. And that was his thesis, that, you know, if he actually recuses himself, does not have influence on Litecoin, it will behave like silver. And it's not meant to be a competitor, unlike Bitcoin Cash, to Bitcoin. It's meant to be a complement to Bitcoin, where I believe that, you know, a lot of, as countries and you know, family offices and wealth moves into Bitcoin, they will treat it like a reserve asset that it's meant to be. So it's not something that they will use for everyday transactions, but it will be priced very heavily up because there'll be so much money stored in it. It's a store of value. And then Litecoin will have the function maybe of silver, where it's poor man's gold in essence. And so everybody that missed out on Bitcoin, at least in the short term, you could see that price action happen in Litecoin, along with all these other currencies, because you know, I think a lot of people jump into it when prices start going up. So you're going to see all sorts of stuff go up. But what are your thoughts on Litecoin?
You know, well, Litecoin has a special place in my heart. It was actually the first cryptocurrency I bought prior to Bitcoin. So I it was kind of my first transaction. I remember doing it. I was actually on the BTC-E exchange that I first bought some Litecoin. Thankfully, I took everything off of that exchange before they had that shutdown, that NSA government shutdown. But no, I really like Litecoin. I like that it's an honest currency. Now, one thing I would say though is anytime someone is buying something instead of something else, if someone's buying gold and not buying silver, that is still competition to gold. And now in theory, if people are buying one, it creates an excitement, and it's good marketing for the other. And I think Bitcoin and Litecoin and the rise of cryptocurrencies have created a synergy that's basically helped everybody. So I do believe that. But at the same time, on a fundamental basis, if somebody is buying Litecoin, it is competition for Bitcoin. I do believe that on a very baseline level. But at the same time, I like Litecoin. I've spoken to Charlie Lee a number of times. I think it's an honest currency, although I would say that an underlying reason that he sold was the fact that he was probably up hundreds of millions, maybe even billions of dollars. Who knows how much money Charlie Lee would have made. And I don't fault him for selling his cryptocurrency, as much as I want to believe that it's, because he wanted to be honest and true about it. I think there's nothing wrong with him selling his profits and moving on. He got it started, and Litecoin is going to serve its role in the world. Now, he basically top-ticked it. Litecoin, I want to say he made that announcement at the beginning of December. Litecoin was in the $300 range.
On Coinbase, I think it hit 420.
Yeah. I was going to say it was like 4 something when he sold. So, I mean, now Litecoin is $150. Mm-hmm. So, it was quite the move, and he could take a third of his position essentially, or 40% of what he had before, and buy up. Well, it would move the whole market, I'm sure, but regain a lot of his position at a much cheaper price. And I'm not saying he's going to do that. I think he's going to be an honest guy about this, and he's going to support the project. He's made enough money to probably last him the rest of his life and some. But Litecoin is one of those currencies like Bitcoin that are going to be around. It's not going to be just Bitcoin. It's just the way the world works. There's going to be room. There's going to be pie for other ones. And the best ones are going to be around forever. And Litecoin is one of those. It had the vision of Bitcoin. They were able to implement things like the Lightning Network and develop it. You have some of the smartest minds in the world working on Litecoin as you do Bitcoin. It has that first mover advantage similar to Bitcoin. I mean, obviously Bitcoin has the first mover advantage, but I believe Litecoin has aspects of the first mover advantage that will continue to benefit it as time goes forward. I mean, you even said it. It's the silver to Bitcoin's gold, because it was the number 2 going back to 2012, 2013, when there was just Bitcoin. And then what else is there? Well, there's Litecoin. And I think that there's going to be long-term implications. And I think Litecoin is destined for a $1 trillion market cap as well. So let's see what happens from here. It's going to be, developing of the community, fundamentally growing. And as people come around, and one thing I think was really positive was, Bitcoin was a very libertarian, anarchist type of investment. And I believe it still is. A lot of us have those limited government beliefs, but the stigma of that, I believe, is slowly starting to change. And I think, again, going back to perception, as long as it always has that, there's going to be a good part of the population that are disenfranchised and only going to get involved with it until they have a real need for it. And I think fundamentally, Bitcoin is going to start serving those needs for people where they're like, hey, this is a real viable opportunity, or there's real viable use cases for me to get involved with Bitcoin and Litecoin. I think going forward here, we're going to see that more and more. And the perception of it isn't going to be so much these tinfoil hat guys, right? Crazy guys like me that are into it and, anti-government.
And and I agree with you 100% that I think I don't believe it's just one currency, although I do think Bitcoin is going to be the most dominant currency because it is the foundation that holds the entire digital monetary system together. Just like even gold, most academics would agree with me, but the fact that gold still has a $9 trillion market cap tells you that ultimately it's the asset of last resort. When you go in the line of liquidation, when all hell breaks loose, the only asset people will still trade is not going to be the bonds. It's not going to be any paper asset. It probably won't even be a real estate deed. It will be gold. And Bitcoin is going to definitely play that similar role in the digital monetary system. But also comes back to some of what you're saying, why I believe that cryptocurrencies, it's more from a human, it's the human emotional and confidence effect, where the last 50 years essentially have been relatively stable if we look at world history. So a lot of us, are very conditioned to just assume that, hey, somebody's got our back and things are fine. The system's in perpetuity and it's always going to stay like this. And I think especially after 2008, when you look at millennials, they've come into the world in an unstable world where they've seen their parents lose their houses. They've seen their parents lose their retirement accounts. And so they're inherently, they have I think they did a survey, and 92% of millennials have a distrust in central banking and the banking system. They're actually a larger population than baby boomers, which was the largest generation in history. I believe baby boomers were, 60 or 70 million. Millennials in the US are going to be 80 million. So they're definitely going to drive demand for cryptocurrencies. Already, this is again coming from very structured research shops where 2016 was the first wave of millennials when they came of age, where they actually started deploying capital. And that was coincided with the rise of Bitcoin. So, there's, I think, many years ahead. And as more and more people around the world start to lose faith in their governments, which, by the way, most measurements in government confidence, we're actually at a 50-year low around the world in confidence in government. So all these factors, at least for the next 10, 15 years, are going to definitely drive this currency, where cryptocurrency, especially deflationary ones, because people subconsciously, like yourself, that you had a personal experience where your family experienced something in Argentina, and therefore it taught you that, hey, don't take things for granted and always park some of your purchasing power away for a rainy day. I believe more of the world's population is going to be cognizant of that going forward. And I think that is what's going to drive cryptocurrency. So I'm in agreement with you that I think we've only seen just the beginning of this.
Yeah. It's interesting. I was speaking with Jeff Berwick of the Dollar Vigilante, and he was telling me about the Anarchapulco conference. And, I've gone to gold conferences in the past, and it's usually 50, 60, 70-year-old guys there, and a lot of times not very wealthy people. Because of the nature of the precious metals community over the last few years. So the thought process, of people who have sound economic principles is, backed by people with maybe not a whole lot of money in some cases. But it's kind of cool because since 2017 has come around, and Jeff Berwick was a testament to this at Anarchapulco, there was a large community of people who have been enriched, with these very sound ideas, sound economic principles, who have been enriched because of cryptocurrencies, and a lot of millennials at that. And it's a different dynamic. Like I said, at the gold conferences, you have these, old men. And I went to the North American Miami Bitcoin conference. Dash sponsored the after party. Tons of 30-year-olds. I don't know, maybe you heard about this. Tons of 20 and 30-year-olds. It was at a strip club. Dash sponsored the after party at a strip. It was completely different.
I think it was like Tron. I was reading. I don't know if it was Tron or one of these other ERC20 tokens or platforms. This Snoop Dogg was doing a party in in New York. It was a gathering.
Right.
He was going to be singing or rapping.
Much different though. That's right. That's all I'm making my point. And, you know, things are changing. The millennial population has a much different perspective of the world. They grew up in the age of the internet where information is available to them. They're connected with people all around the world. You know, AI is going to be a major, major game changer going forward for the millennial population. I mean, you know, millennials are graduating today in colleges, teaching things that, you know, in a lot of cases are worthless. You know, the average person is graduating with $40,000 worth of debt, and the price to value of the degree they're receiving is not what it used to be 40 or 50 years ago. So again, it's that new normal. And I'm a millennial, and I don't see a degree the same way that my parents saw a degree. You know, the expectation when I look for somebody to hire isn't the way my parents grew up and looked around and say, hey, you know, this is a good candidate for the job. I don't have that same perception that they did because I grew up in a different time frame, and I'm seeing the world in a much different place, and things are changing. And I think, you know, legacy aspects of the government are going to try to continue to push degrees, because obviously it's their system, it's their teachers, it's their pension funds that they're going to continue to have to maintain, attempt to maintain at least. But I think the free market is going to get away from your traditional system, and you know, they're going to get educated on the internet, on places like this, or if they want to learn a specific trade, they'll go learn it. And that's what competition does. Competition brings down the price. I'm not saying that getting in front of a teacher and listening to a lecture is all bad. But the fact that I have a million other places to get that information is a reason for the price to come down in a large way. The fact that information in the 21st century is as free and available as ever, and the college education system is as expensive as ever, is a complete manipulation of the current education system.
Absolutely. I mean, it's college education, even traditional education anymore is, I mean, I personally have very different beliefs on the current education system, where I feel like it was designed for the industrial age to condition individuals into a 9-to-5 environment, which is generally unnatural. I was never comfortable in it. I would always get up and walk around to my desk, from my desk, because you interact with people, you learn stuff, you engage in discussions. But you know, I think especially with AI coming into effect in the near future, as more and more jobs get displaced, innovation, creativity, thinking outside the box, these are the skill sets that won't be displaced. Traditional jobs like accounting, risk managers, you know, your lawyers. I mean, a lot of these jobs will essentially go away. And I think you know, so we're entering into a total different world. I've read a whole different thesis, and you know, want to pick your brain on this. Is that there's a whole concept of universal basic income to essentially, you know, compensate those individuals, which to me sounds a lot like socialism or communism, but it's in essence to compensate individuals that will be displaced from you know, these all these jobs that'll essentially become that'll go away from the economy. What are your thoughts on that? And there's a school of thought out there that feels that cryptocurrencies are essentially going to be the currency that, you know, the AI is going to earn a lot of these algorithms, and then the government will tax them to essentially, you know, support a segment of society that will be displaced. Do you see any merit to that, or do you feel that there is some you know, steering in that direction? We keep hearing, like, you know, Bill Gates to every influencer out there mentioning it. Every time they you know, people in high places start mentioning things ahead of time, it starts to raise red flags. So wanted to pick your thoughts on that.
Well, the universal basic income, I mean, that's always something that the government, you know, the obviously big government proponents want to promote. And, you know, AI and job displacement is a great scare tactic for that. But all things being equal, you know, obviously an economic collapse will destroy a lot of jobs. I think AI is actually going to be a good thing for the world. I think it's going to create more jobs, to be honest with you. Now, for the person who's been a truck driver for 30 years, losing his job to a self-driving truck is going to be a big deal. That's going to be a problem for that person, and a job displacement that might even destroy his or her life if he doesn't take action and sidestep it. But on a more macro level, we've seen technology come into the world and be very good. I mean, I was reading and looking at some studies. The horse and buggy industry was displaced by cars, and that was a major game changer. Now, people who stayed in the horse and buggy industry obviously got their world turned upside down. But cars came into the picture, and there was, a lot more jobs created. And, not just the direct jobs that were created from all of the car manufacturing, but the indirect jobs. Now you have travel. Now you have the ability to travel. Hotels now come about. I mean, think about that. Nobody was thinking about hotels when the invention of the automobile came about.
Mobility, creative mobility. Absolutely.
You have drive-throughs now coming into the picture. Think about that. If someone was like, oh, wow, people are driving cars and we can serve them fast in a drive-through in fast food. Now, that was probably negative for health aspects, but a whole brand new economy was birthed because of job displacement. So I'm very optimistic on what AI will bring into the world. I think the traffic and the mess that's outside of me right now is probably going to get fixed in a lot of ways. Maybe we'll hover, I know it sounds crazy, but, have some sort of transportation where we're flying places,
mm-hmm.
and traffic being completely, or Elon Musk, for instance, thinks that there's going to be a 10x reduction in crashes because of self-driving cars. It's not going to be perfect, but a 10x reduction. What would that do for these tied up metropolitan cities where you really can't get around? The opportunity to work across town now is opened up. Mm-hmm. So I'm very optimistic on what AI will bring. But I think that 50% of jobs will be at risk, current jobs, of being replaced by AI. I'm not saying everything's going to be replaced, but there's a good chance 50% of what is out there is at a threat of being replaced by AI. And, when you think about it, how can a computer compete with technology? How can a computer compete with, how can a human compete with a computer that's learning, instantaneously on the decentralized internet? The internet is the sum of human knowledge, from the beginning of time, and computers are inferring, and they're learning, and they're implementing mm-hmm. instantaneously as information gets updated in real time. And humans can't do that. We can attempt to learn, but we can't compete with computers in that sense.
Absolutely. In fact, the efficiency that AI is going to bring is just, I was explaining something, in fact, in coming along with real estate, which is something that we mutually have an interest in. The whole tokenization of real estate and the ability to create more liquidity in real estate by tokenizing and selling components of it. So in essence, in a future world, you could be sitting there because title rights are so secure with a smart contract. First of all, a transaction that takes 45 days can essentially be closed within 2 hours because smart contracts can be initiated that quickly. And obviously, I'm talking 5-6 years down the line. And you could even pledge components of your real estate. So let's say you need to pull $100,000 out of $1 million market value real estate. You could take out the component, pledge it to someone else, and through the smart contract, essentially your receivables, whether it's rent, whether it's your pledge, will be redirected to that 10% owner. So just this sheer liquidity and efficiency it's going to create in that system. I personally think people that are holding real estate don't realize what's about to happen when the velocity of transactions starts to accelerate. They're sitting on actually gold mines that suddenly, all of a sudden, every brick has become liquid because you can actually structure transactions that way. I'm exaggerating by saying every brick, but you don't have to liquidate the entire transaction.
Look at Airbnb. How many millions of business owners have been created because of AI? At any one point, there's 5 million listings on Airbnb, and every night, 300,000 leases happen. And that's all being facilitated because of artificial intelligence. And those were business owners that did not have that opportunity, a few years ago, a number of years ago. But because of technology, because of a computer doing a job, now millions of people are making money renting out rooms and homes all around the world. How cool is that?
Absolutely. Agreed. So Kenneth, in the end of taking a lot of your time, I wanted to get your thoughts on where do you see things going in the next 2 to 3 years? I mean, are you bullish on any segment of the economy, and specifically speaking in the U.S. economy?
Yeah.
What are your thoughts on the stock market? Are we in a bubble there? Should we, take abrasive measures and protective measures in our portfolio? Just wanted to get your take on that.
Yeah. In short, I mean, we're 9 years into the second longest bull market in history. I think that should be a sign for anyone that we are getting to the end of this cycle here in the stock market. We are, just a week or two ago, we had Caterpillar suggest that earnings might be slowing down. We had a great earnings season because of tax cuts and deregulation and that optimism. But just the suggestion of a slower earnings season going forward rocked the market by 500 points. I think we were down 600 points in a day. And I think it really goes to show that we're, like a boy going down a hill on a bike and, hitting a small rock and flying off the handlebars. And I think we're at that point. I think you need to be very hesitant when it comes to owning stocks in the market now. Wait for big corrections, and then accumulate. And you can accelerate your accumulation as prices come down. Owning the best companies in the world, I think, is good diversification of your wealth, going back to what to invest your money in. I think owning Coca-Cola is probably a pretty safe bet over the next 100 years. Owning McDonald's or Disney, some of these companies. But, currently, a lot of these companies have gone up so much over the years, and because of inflation and just the way the stocks have been trading, it's probably a good idea to wait, allow the market to go through a reset, and then get back into these, and then receive those distributions. Because again, if you have the dollar devaluate or, inflating and devaluing, it'll take more dollars to purchase a company like Coke. So owning Coke is a hedge against inflation, in my opinion. So definitely tread lightly in these current markets. I think precious metals are severely undervalued at the moment. I know they don't pay a dividend. It's not something you want to just put every single dollar you have in and hold for the rest of your life, because it's a commodity that does not pay a dividend, but it's the safest thing out there that'll retain its purchasing power. And because of the dynamics of what is out there, the Dow to gold ratio, it's a good time to be looking at gold and silver and accelerate your accumulation in these areas for things to turn around, and then you can rebalance in other areas. So I would be really looking at precious metals right now above anything else.
Excellent. Well, hey, Ken, thank you so much for your time. I really appreciate you taking the time out to do this. It's been you've illuminated a lot of my thoughts, and I'm sure the audience are going to love it as well. And I look forward to having you back on the show in the near future.
Thank you, sir. Yeah, thanks for having me on. I appreciate your time.
Thanks. Take care.